Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
Good morning, everyone. It is Monday, May 13th, 2024. My name is John Pieranunzi, and this is the opening swing. Let's discuss the news, as we always do. First, very quiet out of Europe. Not a lot of news that is moving us. And I'll mention Europe's pretty mixed right now, with the U.S. slightly up. But pretty quiet out of Europe. We have a ECB speaker at 9, and we also, getting into the U.S. hours, we have two Fed speakers, Jefferson and Mester, coming up at also the 9 o'clock hour, all times in Eastern. And a few bill auctions, nothing really big out of the U.S. Quiet news day. It heats up significantly as we start to get into tomorrow with PPI, then CPI retail sales, and a bunch of other numbers. Thursday also busy. So today's quiet. The rest of the week starting to look busy. Let's look at our charts. Here we have our monthly chart. What I've been emphasizing on this time frame is that the monthly chart has switched into balance. We've switched into balance because we've taken out the prior month's low and also the high. So it was an outside month. This signifies balance to me. And so far in May was a very strong month, came off the lows. We're inside the prior month. The 5250 region is the bottom of the upper quartile of the April range. I'll add that the more time we spend holding above the 5250s and making progress, the higher the odds that we do make a run at the all-time highs. You know, that the more we're above 5250s and accepting those prices, that idea can gain some steam. However, I'll mention that my primary scenario as of this moment is that May will be an inside month. That's what I'm thinking. Could be wrong. Always a better trade when I am wrong, but that's what I'm thinking as of now. The weekly chart, as we've said, is a little bit more aggressively bullish. We're one time framing higher on the weekly, and specifically last week we broke out above the prior week's range and held into Friday to settle near the highs. So last week was a pretty bullish week, which we're aware of. Let's take a look at our daily chart. Find it here for us. Here's our daily chart. This profile is the April range. This is the April VWAP. And here we see last week, like I said, the strong breakout, slight pullback on Wednesday. This low becomes important. All of this balance here becomes important, and we can see it very obviously on the profile. What happened? We broke out of the prior range. We're searching for sellers, which is what we're doing when we're trading higher. We found them right here, but it wasn't enough to make price go lower. It just kind of stalled us out, and we continued. So this area is important on pullbacks. This is the first line of defense for buyers. This is the 1275s, the prior week's VPOC. On pullbacks that break the prior day's low, this is the key area. We're one time framing higher on the daily, so the prior day's low is of special importance. But that's what's key to see here. We see us impulse out of our prior balance, and then we just kind of start to grind with continuation. So notice, however, this type of action is vulnerable to pretty deep pullbacks. If we get a deep pullback, the first key area, like I said, the 1275s. Next key area is the 5200s, and below that, these 90s to 88s. Above, we have our prior week's high, which is key, and then this 75 region above that, 85s. Let's go to a smaller time frame chart. This is a 4x5 PNF. I like to look at this chart just to highlight the price structure that we're seeing. This profile is the prior week's range going forward, where we can kind of pretty clearly see impulse, balance, continuation. And we can see very clearly this was a pretty hard fought area. So that's the area that we would look to be retested on any pullbacks if we get a pullback. Above, we can see the 75s. We can't see the structure, but it's marked, and also 75 is a pretty important option strike. 85s are the next key weekly high, so that's why those are our targets. We can see this prior week's VPOC is a ledge area, which we would expect support on the initial test. Let's go on to our very granular charts and discuss price action. Okay, here we are on our 2x4 PNF. Let's discuss discuss bullish ideas first because I don't see evidence to not be bullish so far. Could happen at any time. So we see these 58 to 60s. This is a key area. If this is, to me, this is the line of defense, first line of defense towards the prior week and prior day's high. And above that, we have our 75 to or 69 to 75 area. Then our 85s, 92s is the next target up here. Below, we have the 46 to 40s. This is our settlement area. Below that, we have the prior day's low. Then we have the 20s, which is an LVN. And then we have these 1275s. Below the 1275s, this taper area into century, I'm expecting this to be a lot of support if it's hit. And then this is our balance low in the 88 to 90 area. So these are the areas that I'm going to be discussing today. Let's talk about the most bullish idea. The most bullish idea is kind of in progress, which sort of we're pushing up. We made a rounded bottom. We're pushing up, and we're testing into this 58 to 60s area. So if we can hold this 58 to 60s area, and this could all happen pre-market or it could happen on the opening bell. You know, market doesn't really wait for anybody, but so if we hold this 58 to 60s area, then I'm thinking it's a high percentage chance that we test our 64s. If we test 64s and we're not immediately rejected, I think that we could get into these 69s, 6970 area. This would be my primary upside target, my key upside target. Because today, there's not a lot going on today, so my expectations in terms of range are pretty muted, and so these plans will reflect that. So right here, would be the key upside target. If somehow we're able to get into this area and pullbacks hold, especially hold above the prior day's range, or can test into and quickly reject, then that would make it look like maybe I'm wrong, and maybe we continue, and maybe we even get the 85s. So this would be the most bullish idea. 58 to 60s key. If we can hold those, I'm looking at yesterday's prior week's high. If we can hold that, I'm looking at the 69 to 70s. At that point, that's my big target. And but if we're able to hold the prior day's range, then I'm open to excursion up to about the 85s. What would happen if instead we roll over, which is a pretty valid possibility. If we get up into this area, we test these 69 to 75s, fall back into the prior day's range. We don't quickly reject. We try. We can't get this high again. Then I would be open to reversion lower. If we revert lower and these 58 to 60s don't hold us, we're looking for overnight levels, overnight VPOC, overnight full session levels, and the big test would be settlement if it's not already tagged. So the key things we want to be aware of in these two scenarios, these two ideas, this is a very key area, settlement. As long as we're holding above settlement, then we're looking for 58s and 60s, potentially yesterday's high, and potentially 75s, which it looks like that idea could be in progress right now. If we breach these, if we breach settlement, if instead we kind of get this test pre-market, or if this test kind of grinds and then does sort of what we've seen lately where it looks like it should push, but the offers just pile up and we start dripping lower, which I'm feeling like we should get some tension relieved with a push higher, but again, we don't have to. So if instead the offers just pile up and we start going lower, then of course settlement's the important test. I'll add again, any of these test areas, because my larger time frame bias is bullish, again, any of these test areas are a potential area for support and a reversion higher. Settlement, if we start pushing into this area or below, then getting back above settlement would be a key figure for any test and reversion for me, as well as a higher high. But anyway, if we get into this area settlement and we cannot reject and get back into the 58s to 60s, and we instead push, then the obvious next target is the prior day's low, which would break the one time framing. Because today might be quiet, don't be surprised if we start making like attempts towards tests, but don't fully get there. That might be like a rounded bottom that just doesn't quite get the low and then reverts. And in any of those cases where we sort of just miss tests and end up, then we need to be careful because we could just chop around in this area. Chop around between about 40 up to 70. If we just chop 40 to 70, then it could be a tough trade. But anyway, falling below settle, we're looking for a test of the prior day's low. I would expect support. I would expect buyers on the initial test below the prior day's low. I would expect support and reversion. Let's clear these lines. But yeah, so on the first test of the prior day's low, I would expect support and reversion higher. If alternatively we test into the prior day's low, we make an attempt to get higher, we can't, and we get back out of range, then we are looking for 20s, the LVN. If we get to 20s and we still can't get back in range, we're looking for 12s. That's the key area. I would expect support on the initial test of 12s. If that support cannot get us back above this 20 to 32 area, yesterday's range, then the next key area, of course, would be Century. I'm expecting a lot of support ahead of Century. It's digging right into this ledge area. It's where a lot of the fight happened. I would expect support on the initial touch of Century. If we fall below Century, then the next key target would be the 88 to 91s, which is the low of this balance. This would change the environment for me if we take this out, because it would change this whole environment from upward sloping balance to, well, pretty much price discovery higher to balance. So a break of the 91s to 88s, I'm not expecting it today, but that would be the next target below the 5200s. Should we break this range today, which I'm not expecting, or should we break this range, or especially above the 85s, I would just use the stock zones to guide me. I make them, but I'm not planning for outside of these areas today because I'm not, well, I mean, I plan for them every day, but I'm not going to waste time on the video today because I think that the range could be a little tighter today. So, and I think today could really set up the week. Now, we also could, the caveat to that whole idea is sometimes when we have a slew of numbers later in the week, sometimes you see a busy Monday because there's positioning. So that could be how I'm totally wrong about today being slower. So keep that in mind. You always got to be aware of every possibility when you do this. If you're a trader, you got to like surprises. You really have to like surprises because you're going to be surprised a lot and you have to react well to them. But that's what I'm seeing today. I think today is likely to be a quieter day with a bit of an upward skew, but I think we could see some reversion back into range. I expect that a reversion to be mild, and I think these areas would be supported. It would be a surprise to me if we saw a significant break lower, but it's always possible. But that's what I got for you today. I'm going to wrap it up. Managed to get in 12 minutes today, guys. How about that? New land speed record for the opening swing. But I hope everybody can start their week off well. I hope you have a great day in progress today. And of course, the most important thing, I hope you can make somebody else smile today because that's the most important thing. And guys, the thing about that, why I say that all the time, it's not because I'm a nice guy. You get it back. If you make somebody else smile, you get that smile back. So, you know, do that. So, all right, let's get out there, clock some ticks, everybody. Start the week well. Bye-bye.